Okay, now we're moving on to our final session of the day, our investor panel that's looking at battery raw materials investing across the value chain. So I'd like to invite my panelists to the stage, please. Jonathan Cordero of Eurasian Resources Group, John Meyer of SP Angel, David Whittingham from Frontier Strategic Resources, and David Merriman from Roskill. I had seen Kwasi Ampofo from Bloomberg yesterday, but I'm not sure where he is right now. But if he joins us, we'll just sling him in. So somewhere between cricket and beers, we have this discussion on the now very, very critical raw materials for greening our future, electrifying our future, and where they come from. And I wanted to start by framing it into an Africa perspective, just to sort of set the scene as we're here down in Cape Town, lots of African projects, and get a steer on what Africa's mining sector could stand to benefit from in terms of battery materials extraction. Jonathan, perhaps we could start with you, as you guys are well positioned across Africa, and maybe give us a bit of insight onto how ERG are looking at across the continent as well.
Yeah. Well, at the moment, we're looking at probably one of the biggest industrial transitions that in history that we're facing. And Africa is currently almost not participating, and I will explain why. The batteries story is mainly a Chinese-driven story, right? Most of the raw materials go into China. Most of the midstream and downstream processing capacity is in China. Even most of the markets for batteries, even for electric cars, for consumer electronics, is China. China has over years done strategic investments across the value chain. Probably most of you will have a smartphone, right? An iPhone costs about $1,000. Thereof, about $180 is raw materials. Thereof, $3 is a battery, and thereof, about 30 cents is Cobalt, where we are a larger producer in Cobalt. So that gives you a bit of a feeling of where value is captured, right? Already the $1,000 to $180 shows you why the market capitalization of Apple is higher than the entire mining industry and all the companies that are present in Cape Town this week. So we need to find a solution where Africa and the African countries that we all operate in can get a bigger share of the wallet. Yeah.
But without being perhaps prohibitive, you look at something like Tanzanian regime, for instance. It's difficult to take sort of resource and capital out of the country without a high tax premium on that. So something like that would perhaps sort of send it the opposite direction. Is there some sort of sweet spot here, or is it just the way the world works at the moment in terms of the logistics and the upstream, downstream nature of it?
Well, there is some stuff going on in Tanzania. Graphite is something they have, some sensible projects in Tanzania, and certainly a couple of them have got finance. But the Tanzanians have really done their best to put off investment. They're fixing it bit by bit now, but it's going to take a long time for longer-term confidence to return. And okay, they're almost like one of the worst examples of Africa and African politicians messing things up. And Africa is a bit of a bit part in a lot of this. I mean, if you look at South Africa, yes, there's loads of processing here. There's fantastic skills. This would be the obvious place to set up a rare earths refinery. But I don't know anyone who's planning it. There's loads of smelting expertise, ferrochrome, other ferroalloys. There's even steel businesses here. I just don't see anything really getting into the battery business. There are other things. I mean, if you look at the palladium price, that's a beneficiary or partly of demand for hybrid vehicles that use more palladium, and nobody's scrimp. The auto manufacturers have loved to scrimp and thrift on metals in their catalysts. Well, they don't do that now. But at some point, platinum and palladium is over when everybody goes pure battery. I know they're not. I know the hybrid stuff is successful now, but I just don't believe that's going to last forever. I don't really think that's the long-term solution. I think the long-term solution really is pure battery. We're looking at the battery producers. In fact, we're raising money for a lithium sulfur battery producer at the moment. The key metals in there are nickel and lithium and graphite. There's not a lot of anything else. I mean, clearly cobalt's going to be important for the lithium-ion batteries, but not every battery uses that chemical. So, yeah, I think Africa will be quite good for more of the rare earths than anything else, but it's not huge business.
Okay. David, you're based in Hong Kong, but you know China very well. Do you have any views on perhaps what Jonathan was saying there in terms of China dominating the supply chain, how that's creating interesting narratives for an investor to come into this space as well?
Yeah, absolutely. I think one of the interesting things is that this is definitely a China story. Not only do they dominate, the entire supply chain from the refining to the actual battery manufacturing, but also the end market for electric vehicles. And one of the opportunities that we see is that all this overseas development, whether it be in Africa and other places, is really separated by a very large gap between the Chinese market and the Chinese operators and the Western developers. One of the areas that we see for huge potential is how to work with these junior mining companies that are primarily led by people from Australia or South Africa or Europe, that are all focused very, very much on the Chinese market, but yet tend to operate at a distance and tend to find accessing China to be quite difficult.
Yep. But what if China's slowing down? How much are we to believe that China's sort of slowing down? The EV story is certainly slowing down due to regulatory change. How do you see that happening in the sector for a short period, for a long period at all?
I think the general trend is for mass adoption of EVs. The government has put a number of policy and strategy initiatives in place, and I think the one thing I've learned from 20 years in China is don't bet against the government. If they want to do something, they're going to do it. I think what we saw over the last year was kind of a perfect storm, right? You have the general macroeconomy slowing, the economy's a bit sluggish, then you have all the incentives kind of going away, and then you have the trade war. So I think it was, the first time we saw a bump in the road, so to speak, for the EV story, but I think the EV story is one that, will continue, and I'm still very bullish on.
Yeah. Jonathan, do you echo that sentiment?
I think the last sentence was very important. Bump in the road, short term. We as a producer, we look long term. When we, from exploration into production, it's probably 10 years if you're quick. Then you have a life of mine of hopefully more than 10 years, 20 years, 30 years. We need to take a long-term view. We think that the EV trend is stable, and the numbers that I've seen from our colleagues of Roskill are just massive, right? You're looking into demand growth, quadrupling till 2050. Most of the relevant metals, being it cobalt, nickel, lithium, or you name it. This needs to come from somewhere. Yeah, and all going into Russia for cobalt is not going to be the answer. It has to be Africa. It has to be the copper belt for copper and cobalt. It has to be the other countries that you mentioned. It's going to be billions and billions of dollars that have to be invested in building this supply chain, and the demand is there. The demand is strong. But what I want to emphasize is it needs to be sustainable. Right, especially if you see these type of growth rates, there's a great risk that we have a Wild West, and we're already seeing that. The chance that in your phone you will have child mined cobalt in there is probably 50% at the moment. This is something that is totally unacceptable for our industry and our society. So, and it will be growing, right? If you have the growth, there will be more artisanal mining, something that the host countries need to manage, but we as an industry as well. Yeah.
What are your thoughts on this notion that DRC should create a sort of a state-orientated cobalt company for all of the artisanal mining? It's a bit conflicted in a way, really, because it's sort of promoting artisanal techniques, but equally that's an example of where the state's coming in to take control of a situation that's kind of become a bit unmanaged.
Well, you're naming something that is very recent. We don't know all the details yet, but any movement towards regulating and improving the situation for the people in Congo, one of the poorest countries in the world, we highly appreciate and we support.
Okay. Any other thoughts on DRC or Cobalt at the moment? Gentlemen, the data guys at the end, can we bring you in?
Hello?
Yeah, is that on?
Hello.
David?
Yeah, I think it's just it's useful to reiterate the point that David made, that this situation in the EV market that we're seeing at the moment, particularly in the Chinese market, is going to be a short-term scenario. We're seeing that impact that the subsidy cuts had in the middle of last year. That is going to be pervasive probably through EV sales in the Chinese market throughout 2020, and we're expecting relatively slow growth in that Chinese market. But longer term, there's so many incentives that are within the Chinese market, not only financial, but also to do with the ability to drive whenever you want, the not having to go through licenses to then buy vehicles, that will continue to push this. That's just on the consumer side. All of the OEMs that are based in China are still trying to capture that market share and compete directly with the existing major European or North American OEMs that are desperately pushing money into the development of battery electric vehicle models at the moment. But it's interesting that battery electric vehicle story will be long term. In the near term, we're likely to see a much greater move towards hybrid electric vehicles and some 48-volt systems as OEMs really struggle with that added cost of production compared to their ICE models.
Yeah, so the price point for a consumer is kind of inhibiting the next stage of adoption, you think? You know, we can't all afford the Tesla S type as opposed to...
Exactly, yeah. I mean, if you do a like-for-like comparison in terms of production costs for a battery electric vehicle compared to an ICE vehicle, you're talking around $10,000 of additional processing costs. Now, much of that is within the battery itself, and that is something that particularly those automotive manufacturers that are targeting the mass market, or the everyday Polos, the Golfs, these kind of vehicles, that's something that they can't yet pass down onto the consumer. So that's really a bit of a blockade for them at the moment, and battery costs will need to come down to really be able to tackle that.
Yeah. Okay. Kwasi, do you have any thoughts on the battery costs coming down? Similar sort of time horizons as well in terms of the EV uptake?
Yeah, I mean, in terms of battery cost.
Sorry, I don't think that mic's on. Are you guys okay to share? Or David, can we get one more?
Yeah, in terms of battery cost, we've seen significant reduction in cost over the last, I would say, 7-8 years since we started tracking it. And what we've seen in terms of price parity between ICE and EVs, I think by 2025, according to our models, it's going to be that price parity. So costs and price being one of the barriers with respect to uptake by 2025, when there's that parity, we're going to see quite significant adoption in terms of sales. And with respect to battery, I think we are looking at it going way, way further than that it is. I think currently we are around 100 per kilowatt, something, and it's going to go further. So that's our projection.
Yep. Okay. I wanted to focus in on certain commodities now, just get everyone's sort of take on where they feel, price changes or in terms of performance of the miners of these commodities as well, particularly in the junior tier as we're focusing on here. And let's just start with lithium, being the sort of primary input for batteries at the moment. Perhaps we start with you guys at the end again. Sorry, the speakers are positioned a bit back. What's your thoughts on the lithium outlook for lithium demand?
I mean, lithium demand, clearly it's still going to grow. And I think by 2025 demand, we're looking at about 1 million LCE. So yes, there's a really strong demand growth story for lithium. And it's just, I mean, we've been quite bullish on supply. That certainly, all of the sudden you have all these projects in Australia, in Chile, announcing what their capacity is going to look like. And then, I mean, sadly, you know how mining is. You can be very optimistic about a project within 3 years, but then we realize that there has been a slowdown, but then we are still quite confident that even within our de-risk numbers, there's still enough supply to meet that upcoming demand.
What's the demand story not anticipated, though, with Chinese policy to scale back on the subsidies for EVs. That must have been factored in a few years ago.
So
that would have impacted the demand forecast a few years ago. So how did that interplay with your supply predictions?
My colleague, it's just short term. Even if you look at when subsidies in China were cut last year, like it did take a hit. So those are some of the stuff we did factor in our model, and we talk about policy changes. And as policy is changing in China, if you look at areas like EU and probably in the medium term in the Americas, you realize that there are policies that are more EV friendly and all that. So policy is one of the factors we considered when we talk about things that could slow down the demand story. It also infrastructure, and by infrastructure we mean charging. Because charging facilities, I mean, if you take most cars in, say, the US, you realize that houses have garages where you can just plug it in there in your home. But then if you live in London, you realize that not many of those houses have garages where they can plug it at night. So it's just that infrastructure, and areas like Africa and other places where the infrastructure is not, I would say, up to the stage where you can fully deploy EVs across board.
Right.
We consider those as stuff that could slow down adoption.
So it's not caught up with where the fleet sales are at quite yet?
No, yeah.
Okay, interesting. David, do you have any thoughts on, David Roskill, any thoughts on lithium outlook for demand, and perhaps between hydroxide and spodumene that's coming?
Yes,
Carbonate, sorry.
Okay, carbonate and hydroxide. Yeah, I mean, we are seeing this shift towards higher nickel cathodes, which is something that's been talked a lot about over the last couple of years. I think that it's now widely accepted that 811 or NMC 811 is not going to be used in mass market vehicles for some time, just on the added costs of the battery management system that's needed from that, the safety costs, just the safety aspects of that, and made many of the mass market vehicles very uncomfortable with using that. That being said, on the demands for the actual lithium compounds that are being required, even 622, which is being used in a vast number of the mass market models that are being brought forward for electric vehicles, preferentially uses lithium hydroxide. So we are seeing a switch over to much more battery-grade lithium hydroxide consumption. We expect that crossover between carbonate and hydroxide as the largest battery-grade compound that's being consumed to be around 2024, 2025. And from that, we see hydroxide growth really outpacing carbonate demand. There will always be space for significant carbonate demand, however, as we use it in LFP and some of those lower nickel cathode materials, which still have a place in this market, not only for the automotive industry, but also for ESS and portable electronics and as such. So there will still be place for both products, but hydroxide seems to be the one that is much preferentially being demanded, particularly towards the end of our 10-year forecast period.
Yep. Interesting. Good. Yep. Very good. Any other thoughts on lithium there? Anyone else want to add something?
Well, Reuters reported that there was $300 billion of investment going into the electric vehicle supply chain, the market, everything. It's a huge investment. It doesn't happen overnight. It's going to take years. It's going to be all sorts of different factors affecting the supply chain, not just from the digging it out of the ground, but also all parts of that supply chain process to the point, and it will be pushed and pulled according to consumer demand for electric vehicles. We've certainly gone beyond a tipping point for people wanting to buy these vehicles. Now they know how nice they are. Now they know that they cost about 20% to run of a gasoline vehicle in the UK, for example. Lots of different ways of working the numbers, but it's preferable. You've got the London ultra-low emission zone coming in next year. That's going to be very difficult for a lot of people because the cost of driving on a daily basis in London goes up a lot.
You're already fined for a diesel car in central London, I think it is. Something like 28 quid or something if you go in the zone. Yeah.
If you're in the central zone, yes, exactly. And that is going to extend out to cover at least 4 million people, many of whom drive their kids to school and stuff like that. So there is huge change, and it's not just London. Paris and lots of other cities are moving in this direction. I mean, I live in central London in the week. I'm looking forward to it. I do not drive in central London because it's madness. My neighbours, in fact, a Tesla is now the most popular car in the street, from what I can see, and very few diesels around. I mean, it's all the old Russian driving a Porsche Cayenne or something like that. They've put charging points in the lampposts, so everybody's okay for charging for the moment. But I don't see how they're going to wire up the entire street, and I don't see how they're going to get that much electrical power in, and at some point they're going to have to start charging for it. So there's loads of issues to solve here, and at some point it wouldn't surprise me if the policymakers deliberately start to slow it down. I think the consumer demand could easily run ahead. I'm very unconvinced about the hybrid stuff, as I've said before, and I think because ultimately the hybrids will get banned as well. So go pure battery fuel, and we are seeing the technology on the battery side getting better and better. It's a bit incremental on the lithium ion stuff, and one of the problems with lithium ion, I think, is going to be the quality of the batteries being produced, because the Japanese are brilliant at it. I think Tesla's got it pretty much nailed, but the Koreans had a lot of battery packs that blew up in grid power installations. We don't, you don't want to see that, because it will really knock confidence in the market.
Okay, Jonathan,
Yeah, I couldn't agree more to the fundamentals, the strong fundamentals of lithium. Still, we have not taken positions in lithium, and we do not intend to take positions in lithium in the foreseeable future, and there's 3 reasons for it. One, on the asset base, we have seen that probably lithium was ahead of the curve. We saw that in overall valuations on the asset that have come down quite significantly to a point where it gets now more interesting. But the second point is the quality of assets that we have seen are not to the extent where we would like to invest. And the third one is the relatively low incentive price to build an operation in lithium compared, and that leads to the fact that there's certain scalability that may disrupt the supply-demand balances for us. So we would like to take a more long-term approach. And the fourth one actually is that many projects that we have seen, especially in Latin America, have very big issues when it comes to environment and the involvement of communities. Something that we as a major is a total no-go. That's something that we cannot fix or do not want to take that reputational risk.
So what are your commodities of preference at the moment within?
Yeah, we're just in the commissioning, we're in commissioning of the metal coal project ATR, which is one of the largest copper cobalt refineries. It's a tailings reclamation project in the DRC, where we're going to produce about 105,000 tons of copper and over 20,000 tons of cobalt. We have another project in feasibility that we're going to announce in the next couple of months. So for us, copper, cobalt are the most interesting commodities. We also look into other base metals. We're highly interested in nickel. But we're also looking into further niche commodities such as vanadium, tin, tungsten, tantalum. One, maybe to derail a bit the discussion, but one thing that's very rarely discussed in battery discussions is vanadium. Vanadium redox is a very interesting technology in my point of view, especially when it gets to storage, less for EV, but mainly for the renewables transition.
It has is that because of its higher energy density?
We have the battery experts here. You will have more storage capacity, although the batteries are a bit bigger, a lot larger, and you have capacity-wise you can scale it, but you have an unlimited recharging cycles, especially when it gets to peak loads, balancing the grid. We believe that this is an interesting technology to look at. Although the industry seems to stick on this application still to lithium ion. When you see the Tesla wall panel, that's based on lithium ion, not vanadium redox.
David Whittingham, are you interested in straight commodity plays, or is it more a mixture of things? What kind of commodities have you been meeting with over, and what does Frontier Stretegic tend to focus on within the battery sector?
I think it really just depends on the background, how much money you have to invest, and what value you think you can add. When I look at the usual suspects, cobalt, lithium, graphite, we have to pick and choose where we focus. We're a new fund, we're a small fund. So, I think for us to really make a meaningful impact in the lithium space is probably not going to make as much sense. But, graphite, for instance, is a space where we feel like we can add value. It's a China story. It's one where there's a lot of, a significant gap between the overseas producers and, the Chinese consumers. And it's a place where we think we can add a significant amount of value and smaller equity check meaningful.
Yep. Okay. I want to talk about the sort of capital flows into the battery metal class, if you like. And does the panel feel that there's enough going into projects at the moment? I mean, we're here raising capital for junior miners. There can always be more. There have been more difficult periods, but also it's never an easy period to raise cash. But specifically for the battery materials related juniors, does the panel feel there's enough capital going into these metals at the moment to meet the demand projections? Guys, do you want to start from the top, and then we can.
Well, I'm pretty sure the consensus here will be no, unless I'm wrong. But then, yeah.
But how far off is it? Do you feel? Are you advising investors as well who are subscribed to Bloomberg that there's a certain gap?
I mean, we've done the numbers for battery manufacturing, and I think we came down to about a little 100 billion that we are looking to flow. That could potentially flow into the battery cells and manufacturing sector by 2030. But then that was about it. But that's actually the problem. So you've got this whole value chain, right, from the EV sector to the cathode producers to the battery manufacturers. Like that's where there seems to be all the capital attention. Like Tesla, for instance, I don't know what the valuation has got into right now, but then it's all about like the capex flow is going, I would say, downstream and less upstream. So it's just, I mean, you have the usual mining risk, the pre-production risk, the risk of permitting, environmental risk. And for once, I would say for once in mining's lifetime, you've got a different set of investors. Traditionally, people who are looking at a good project, put in their money and get their money back. But then the kind of investors that the whole EV boom is attracting are people who want to know that are your supply chain clean? Are there children involved in your business? Are you operating in areas where there are incidents of potential human rights or other issues? So it's just those questions that the mining industry has not been able to answer yet. That is why I assume, or that's why probably we are not able to attract the kind of money that should be flowing into the upstream and not necessarily just the downstream and the EV sector. But as to what specific numbers we need, I'm not sure. We've not really crunched a number for all the metals, but I can say that is woefully not enough. And also for the juniors here, I think there are a few ways that we believe that you can de-risk the sort of projects to be able to attract the kind of funds. And if you look at them, for example, First Cobalt and Glencore's arrangement, for instance, where they were able to raise $45 million to restart their plans. It's just that partnership with major caps, like companies that have already established themselves. We all know Glencore has been in the downstream, upstream business, like getting attached to Glencore, securing feedstock, and being able to demonstrate that capability helps. If you look at, I think, was it Cleantech Sunrise, and their initial arrangement with MCC, the China metallurgical company, to develop their HPAR project for them. I also feel that was also a de-risking initiative, although it ended up not happening. But then partnering with a company that has demonstrated HPAR capacity in Papua New Guinea, I think was a way to de-risk it. And also, if you look at Sconi, the Sconi asset in Australia, their initial arrangement with SK Innovation for offtake agreements and also some financing arrangement. Also, that ended up not happening. But then those are the sort of partnership with the large-scale people who have established themselves. And we believe such arrangements are the ones that can de-risk juniors to be able to attract financing into projects.
Yep. David Merriman, any thoughts on de-risking juniors or any of the companies you're advising or at the moment?
Sorry, I didn't get.
Sorry. Any other thoughts on juniors de-risking their proposition to attract that capital back in? And do you have projections of the capital gap, perhaps, within the lithium juniors or the battery set entirely?
Yeah, I mean, the lithium market at the moment is a tricky one for juniors. We've seen, weak prices and falling down over the past 18 months or so, and that's made it very difficult, particularly in the short term, for juniors looking to acquire any finance. I think the capital investment, particularly for the short term, for the lithium industry in particular, is probably sufficient at the moment. I mean, we have a lot of latent capacity at different steps of that supply chain, and the need for new capacity in the short term, at least, or short maybe into the medium term, is going to be probably limited on a greenfield aspect. That being said, and when we're looking longer term at this, there is going to need to be significant capital investment in expansions, in greenfield projects, and an incentive price that's built into lithium to achieve that. So in the short to medium term, probably about right. Longer term, definitely a need for a second wave of lithium investment in there. And that will need to be put in place multiple years before that to allow for the development times.
Yeah. John, do you have any idea where that capital is coming from with the investors you speak to? Yeah.
I think it's going to come. The investment is certainly coming through from the Chinese. There are other groups looking at it. We had a member of our team stolen by Volkswagen. He's a graphite expert. We know what he's interested in. So if you look at the companies, you've got Cobalt Minerals. In fact, they've just done a deal with Mali Lithium, and they're backed by a Chinese group. So I'm pretty sure that's going to happen one way or another. Savannah, I think, some issues in Portugal, but I think they'll get through that because the European Union will be keen to back that one. So that's lithium. If you look at the rare earths, are going to be important for the permanent magnets. You've got people down here like Rainbow Rare Earths in Burundi, Makango in Malawi. So that's good. They're African projects, a bit like Codal in Mali. And then what else have we got? Clearly it's a bit harder to buy into nickel at the moment. And on the graphite side, Renascor in Australia, and the other one is Talga in Sweden. So I mean, there's quite a lot of these things that are ready. There's not thousands of them, but they've all got healthy interest from industrial partners that are very keen to help these guys get going. So I think the finance will come together.
Excellent. Good.
Maybe if I could add my 2 cents worth. I mean, one of the things that I'm not a mining guy by training, and is fairly new to the industry. It seems like mining is a cycle of feast and famine, and it seems that this thematic of batteries tends to draw in a lot of investors to certain commodities, whether it be lithium or cobalt, and you've seen that in the pricing fluctuation. I would say it's not a matter of lack of capital, but capital going to the right places. And as a guy from Detroit who really understands automotive and understands the production cycle, the thing that scares me is that time lag between identifying a shortcoming in the supply chain and the actual ability to get capital, get the project up and running, and get it verified to get back in the supply chain. That's the constraint that I think causes a lot of concern.
Speed of getting that capital to work. Okay, very good. Look, we're pretty much out of time, but I just want to get a quick take on sort of top performing commodity within the battery metals sector, or the technology metals, if you want to add rare earths, etc. What's your view? And you're allowed to talk your own book, or which commodity do you think is going to perform the best over the next year within the group of commodities we've spoken about today?
Well, I think everything tends toward copper. We're very bullish on copper. It will fuel the whole transition of the industry, and being it EVs or consumer electronics, the infrastructure will be built, and that will be based on copper.
Yep. John?
Well, it should be graphite, but it's very difficult to talk about graphite prices. So I would pick nickel. Like all the base metals, it's got whacked with the virus news, dare I say it.
Yep.
And clearly there's going to be massive demand for nickel hydroxide. So that's where we go. And it's a wild beast of a market at the best of times.
Yep. Okay. So nickel, another strong year. David?
I'm very interested in rare earths right now. I think the recent press that it's gained from the U.S.-China trade war has kind of highlighted the fact that it's an Achilles heel for the Western world, and I think there's going to be a lot of activity there.
Yep, certainly. David?
Not to sound too pessimistic, but I think that the suite of battery materials at the moment is going through a bit of a refinding itself. And I think a lot of the hype has been taken out of the industry, and there's going to be a period of reassessment.
Yep.
If I had to pick one or two, Cobalt or nickel, I think are the two that are still interesting. I think lithium has to go through this period of reassessment, and price is likely to not have too much support over the next year or so. Rare earths, an interesting one. It's one of the things that I cover at Roskill, and I think it's, again, longer term. I think there's a lot of opportunity there, and I think there's a few companies kind of really taking that at the moment. But in terms of over the next 12 months, I think there's not going to be too much activity in that price, particularly for the magnet materials.
Yep.
Kwasi? I tend to agree. In the next 12 months, the whole sector is still finding itself. It's still early days. Is a price in balance? Yes. Is demand in balance with supply? So in the next 12 months, I think we'll still be in the knowing yourself phase. But then I would say over the next 10 years, at least up to 2030, I believe that nickel will be one of the dominant players, particularly if you look at what could happen with the NMC 811. And I think we are looking at about over 60% of the battery sector being dominated by the NMC 811. And then that is a high nickel content battery, obviously. So from a demand perspective, we believe that nickel could be one of the big players down the line. So.
Yep. Okay. There you have it. Mixed reviews, some suppressed, but the finance does seem to be out there in the right places. Let's have a round of applause for our panelists. Thank you very much.